Good day. This is Al Kleiss along with Bob Linneman today in our weekly soy market watch. It's already week 8 and welcome to June. Boy, we've had a lot of things happen this morning that we're going to talk about, so we're going to jump right in there. Bob and I are both uh, Series 3 commodity brokers, and as such, we always need to do the industry required risk disclosure statement. And I've kind of highlighted two things that I think I always need to talk about is that if you're trading futures and options, you can lose money. And also the last sentence, the last paragraph, opinions expressed are the opinions of the author only and not the opinion of the firm he might be associated with. So again, don't think of this just being Al Kleiss. I've built a good team. This is from the Kleiss team, and certainly Bob is an important part of that team. We're going to look at what happened last week, a price summary of where we are versus last year, some of the main factors to watch this week, and boy, I just changed a bunch of those, Bob. Chart analysis, and then this late breaking news as we see an announcement from the White House that Premier Xi of China and Trump will meet later this week. So this could be very good news if it actually occurs. The really tale of two corn belts in here. If you get Western Illinois, Iowa, really off to a great start. Many of the other areas are very slow and uneven. Customers in Ohio, Indiana, Southern Illinois really disappointed in the emergence, trying to get the last crop planted. There's still 1 million acres of corn to go in Illinois and 1.8 million acres of soybeans. The ratings last week were a lot lower than what I thought. Just 68% of the corn crop was rated good to excellent, the lowest since 2019. The spreads continued to collapse as cash bid starts to fall to new crop bid. So one of the things I've talked a lot about is to look at your June bid versus August. And I thought we would see a little bit more of an inverse develop, but instead we're seeing, I think, some point in time later this month where you might just all go to new crop bids. A lot of uncertainty with the Office of Management and Budget and EPA in terms of what type of soybean oil program RVO mandates are going to be proposed. A lot of skepticism about that, and that took 2 cents a pound off of soybean oil last week, and that took about 24 cents off of soybeans from the close Wednesday to the close on Friday. So for the week, soybeans closed 18 cents lower. Most of that was because of the collapse in soybean oil. Corn, 15 cents lower. We now have pretty good support at 440. And then over the weekend, Trump announced new tariffs on steel and aluminum. He also reiterated that China was not living up to earlier agreements to provide rare earth elements to the U.S. These are key ingredients that we need for making electric cars, computers, batteries. And so the trade war really continued, and that's why we saw the drop in the markets, especially in soybeans, in the trade starting first thing on Sunday night. U.S. dollar moving lower and testing support. Bob, where are the key resistance levels above the market and where is support?
Yeah, Al, so we actually your chart today, we just briefly broke underneath that support line from last week's low. And it just, I mean, by 5 ticks. So not a lot, Al. But the more worrisome thing, I think, if you're trying to be bullish of the dollar, is that, we had some pretty friendly news last week and we didn't go anywhere with it. We
Yep.
didn't hold on to the gains. So again, the long-term trend and the theme has been since the first of the year. It's kind of we moved into a bearish mode for the U.S. dollar, and I think traders are looking for any rally. They're looking to sell that. So again, major support is the April low 97.68, and I think if we talk about that, you get below that level. I think we've said 94.65. I think is the level somewhere in there, Al.
Yeah, lower lows and lower highs, and
Yes.
each week we seem like we're getting, especially on corn, favorable export news, and that always makes me turn over and look at the dollar, and wow, we really are competitive. This is a July bean chart. We corrected lower last week. We took out support at 1040. Today's low on the July contract came in at 1032, and you can see really, really close to a 50% retracement. So this kind of is a key level to watch. I always chart Mondays, first day of the week in green, and then the rest of the kind of alternate between black and red. And these green Mondays, I call them, quite often can be a low for the week. So today's close is quite important. We did see prices sell off late last week, improved weather, uncertainty about the trade agreements moving forward, down 15 on corn. So we're virtually the same price we were a year ago. Soybeans were down 18 cents, took out support at 10.40 today, and we're like $1.50 lower. The one encouraging factor was spring wheat. I always look at that as being more of a commercial market. That was up 17 cents a bushel last week and continues. So U.S. dollar, as Bob's indicated, some pretty positive news last week, but boy, by the time the dust settled on Friday, there was just not much of a change. So the big factors again, I would hope we can get back to trading weather and demand, but we continue to see what's going on. Will we get some trade agreements announced? The July 9 deadline before the tariffs go on, just 5 weeks away. We got to have, I think India and South Korea will be happening shortly, but I thought that a week ago. When will Trump and Xi meet? Weather, watch to see if the late week warmer will help improve crop conditions. I think the readings today in corn will be less than 70%, below the 5-year average. And at 3 o'clock Central Time, we'll get the initial soybean ratings. And what people all over I talk, not just our customer base in Minnesota, Dakotas, and Iowa, but beans are uneven. We've not had enough heat. There's been a fair amount of replant, and so that's really been challenging. And it doesn't have any yield impact yet, but certainly we'll be watching that. And soybeans like sun, they like heat, and we're just not getting it.
Another thing, Al, that the traders are going to be looking for with that afternoon report today is the spring wheat crop rating as well. Because if you can get some another surprise there this week, followed up with last week's surprise, you could get some short covering in that spring wheat market, which a lot of traders might think would spill over into the corn market as well.
Yeah, I think Bob, the spring wheat ratings last year for the initial ratings were the second lowest in 40 years.
Yes,
And talking to customers out there, the late week, they got some sunshine, but with all the smoke we're getting too, that sign of we're not really getting nice, sunny, bright, warm days. I just noticed locally with the smoke that our forecast high yesterday was 88, and we hit a high of 83. Today we're supposed to be 90, and I don't think we're going to get to 85. So I'm not an agronomist, but I would think that could have some impact.
hmm
This is the corn chart. We're down testing support. 440 is level of support, then 430, and we've got this is pretty darn important support right in here. We did have a lot of month-end selling come in last trading day of May, and now we're into June, so we were higher most of the day. Weekly soybeans, there too. You can see we've got support at 1040, long-term support then down at 970. And as I look for a bottom in these markets, quite often I look for a series of M's and W's. Again, lows in here, 443 to 430 for corn, 465 to 480 in the top side. So we would really need to get a boost from wheat to get to that 465 level. Low on soybeans here, 1046 and 1040. Now I have to amend that. The key support is now at 1030. Key dates to watch, May 30 and June 21. Let's look back and see if that May 30 level can hold. That third week of June, always kind of a critical time. Watch your bids, just watch the alignment and see what your basis levels have. We have seen a slowdown in farmer sales, but I think once the crop is up and looking good, a lot of people are just going to start hauling grain. I know one elevator manager said that they're just hauling it in and selling it on the spot market. And this is the late breaking news. 10:10 this came out. Uh, White House announced that Trump and Xi would meet later this week. Okay, I thought it would be pretty positive for soybeans, Bob, but first of all, when will the meeting occur? There's no confirmation from China yet. Xi likes things highly scripted. He doesn't like to go in with no agenda. What will be the length of the meeting? These meetings are quite often 3, 4, or 5 hours. You have translation issues. We have to talk it over, explain the concepts, and our whole way of thinking and speaking, negotiating U.S. versus China is quite different. So I'm hoping that we'll get a 5 or 6 hour meeting and that they go overtime. And then they need to have the topics that they're going to cover. They can't just do what Trump likes to do, have these unscripted meetings. You really have to have a set agenda to get China to participate. And the last thing they want to do in China is to have appear that Xi just kind of caved into some of Trump's demands. That will not happen. And so this meeting, if it occurs or if it fails to occur, is probably more important to the soybean market than the weather. And so I'm hoping that we can agree to talk and that this will be first of a series of meetings. That's my optimistic outlook at this point, and I'm glad that at least we're seeing this talk potential finally arrive. Bob, your thoughts?
Yeah, I definitely agree with you, Al. The traders are wanting to see some substance in these discussions, and really that's what it's coming down to. We're just there's a lot of what ifs that are out there and floating, and you talk billions of bushels that could move here, move there, but until we actually hear those or see those in the discussions between these leaders, Al, it's just remains what ifs, and that with the market's not going to rally on a what if. It
Yeah,
just isn't, not anymore. The initial knee-jerk reaction of the tariffs and the potential there. Traders have backed off from all of that enthusiasm, and now we need to really see it unfold in the negotiations.
great. Okay, great insight, Bob. Please, I'm getting a bunch of calls. I enjoy talking to the farmers. The feedback has been very positive. But if you have questions after reviewing this video, call me right here in the office in Wayzata, Minnesota, 888-345-2855. If you prefer, this is my direct email, alan.kleiss@wedbush.com. Let the staff, directors at Iowa Soybean Association know that you value this service. Have a good day.